Ugh. Ah.
Monday today, huh?
It's a Monday. We had the day off, I guess. Kind of Canada's open, but the U.S. was closed. They got Memorial Day, and since we cover a lot more U.S. than we cover Canada, and there is a little bit of Canadian news mixed in. We've got some Canadian financial earnings going on. I figured we might as well take the Sunday off, enjoy the long weekend. We didn't get it last weekend as we had to do a podcast on Sunday.
That's right.
Last weekend was our Canadian long weekend. We were going to take the break with the Americans, and what a better time to take a break than in May. I'm not sure if you've heard the term before, the stock market term, to sell in May and go away, but that's definitely what's going on. And you could tell by the amount of news that's out there that it's a slow trickle at best. There's a few things going on, but for the most part, I think a lot of guys made a lot of their money early in the year. There's still a lot of stuff that's up. I know we've got a little portfolio going. I've posted on Instagram a few times if anybody wants to go and take a look at it. I haven't mentioned what I'm actually in.
No, but it's quite impressive.
But this year in 2018, I'm in 8 things. It's not diversified properly, so it's not something where I'm going to purport it as being, this is a portfolio you should go forward with. But in 8 things, considering the S&P and the Dow all up under 2%, the Russell 2000, like we talked about last week, which is the bottom 5,000 of the top 5,000 publicly traded, bottom 2,000 of the top 5,000 publicly traded companies in the United States, up 5%, a little over 5%.
It was 5%.
Yeah, 5%. I'm up 16%. 7 of 8 are in the green. 1 over 45%, which is a company that actually has a little bit of news this week. I'm not going to tell you which one it is. Another one over 30. A lot of companies hovering around that 20% mark. It's an anomaly, but I was doing it more so to just see what I could do with stuff I thought, forecasting ahead. What I thought was going to actually take a run based on last year. There was so much that ran last year that I really thought there were companies that got left out of it, that just seemed to sit on the sidelines, or sectors that seemed to sit on the sidelines that didn't seem like they were any worse off. It just seemed like they were being trounced by so much good news in other sectors that money flowed into a bunch of other things that this year turned out to actually be kind of flat. And it seemed like, 7 out of 8, not bad. So you go to Instagram and take a look at it, it's there.
It is.
Right, it's there.
Well,
so and I don't really want to
got like the Midas picks, I guess, instead of the Midas touch, you get like the Midas picks.
Yeah, Goldman Sachs, shoot me a phone call. I'm not doing any financial advisory stuff, but I'll happily work a $1 billion account on your prop desk. So if you want some real money made, we're in the green quite a bit. Some decent picks, like I said, totally not allocated properly. Just making picks, but fairly impressive nonetheless. How was your week?
Excellent. Enjoying the beautiful weather we are having up here.
Gorgeous.
It's been plus 25 and above all week. We got some outside cardio done.
We're both a little tanned.
A little tan today.
Yes. Absolutely. We saw some geese.
We did.
It's beautiful out. It was a long weekend. We crammed so much in that even getting to this podcast and being all prepped and ready for this, you get here and there isn't much. I'm feeling a little. I feel a little nervous because I want to impress you. I'm here to bring the heat. You know what I mean? Yeah. I'm not here to just dilly dally around. I'm meant to get the job done, and there's a little bit. So it sounds like we're probably going to have more opinionated conversation this week.
This time.
Yeah. There's a bit. So
before we get started, how was your week?
My week was excellent. I spent a good majority of my week either at work or with you at the gym, or working on everything in the stock market. Like I said, spent most of the weekend with you out in the beautiful sunshine. So
beautiful it was.
It was a good week.
It
was a good week. Now we come down to the crux of the week, the thing that really makes a difference, and that's putting a polish on how well things are doing out there if people are steadily invested in the marketplace, which they should be. So I'm Cody from Wall Street Breakdown. Welcome back to another episode of This Week on Wall Street.
I'm Anthony from Wall Street Breakdown, and
you're gonna host.
I am gonna host like usual.
Usual. You're gonna host. One of these times I'm gonna host, or we're gonna bring in like a guest host.
Oh.
Yeah, I'm not sure who. We'll wrangle up some hobo or something, and we'll bring.
There we go. We got just let Joe down the street.
We'll just totally spitball it. We'll let a hobo do it, and we'll let you juggle or something. Yeah,
for sure.
Absolutely.
Do it that way.
Right?
That sounds interesting.
We'll simulcast it on Facebook Live or something, and you could just be in the corner juggling, and me and a hobo we'll dance around what's going on in the marketplace. So
all right.
Go ahead, you lead, my man.
Let's jump into the market section of the podcast. How did the markets fare this week?
I'm gonna rip this because nothing happened. Things were just dry. Dow Jones 24,753 to close the week. S&P 500, 2,721. Nasdaq, 7,433. The TSX, which was trading today, 16,016. Gold remained basically unchanged at 1297. Bitcoin taking a bit of a drubbing again, because who cares about Bitcoin? Currently today trading down around $7,200 a Bitcoin.
I think it dropped since the last time we reported it.
So in the main markets, the main indexes and all the different places things were just flat. It's just a flat week where nothing really phenomenal is taking place. But
okay.
At the tail end of the week, something in the market section did trickle in that was interesting. If people have been paying attention, which I'm imagining they have been, oil up above $70 a barrel.
That's
Oil
right.
came down on Thursday as news starts to trickle out from OPEC and a bunch of international oil supplier countries, United States, United Kingdom, everybody that's out there in the market putting oil out there. They're saying that supply is going to be picked up. OPEC saying supply is going to be picked up. So we've seen a steep drop in WTI crude, 66.47 a barrel to close Friday. Airlines all up significantly off that news. I would imagine a lot of companies that haven't had their oil hedged are probably loving that. We're probably going to see a bit of a dip at the retail price. I think we have this week, right? We bought premium gas yesterday for regular
price.
For regular price. I've never seen that before.
Oh, it was a wild Sunday.
They were just out of regular gas though. But yeah, the retail price should come down a little bit as the barrels come down a little bit. We'll see starting this week if there's a bit of a bounce back. As it could be that sentiment was looking for something positive and they start to hear that inflows is going to be a little higher, and then there was a bit of a bigger correction than needed to be. But I still stand by what I was saying a few months ago, and when we talk about the United States, consistently outpacing their previous record of exporting the amount of oil they have, being the leader in the world now in exports, I still stick around that $65 a barrel number. The people who are projecting $100 a barrel is just, I think that's completely out to lunch. I fall much closer to the $50 a barrel side of the argument. But 65 seems like a nice landing spot, a spot we were at for a while. Pulled back almost to 65 at 66.47 to close the week. I like oil around 65 because I don't see all these cartels being able to withhold too much, because everybody's got to kind of play ball. You know what I mean? That's the main thing, is everybody has to play ball in this international marketplace. Now, you see a lot of countries taking hard lines against all this. Do you really want to be that one standalone albatross that makes things so much more difficult and cause the world's economies to have to come down on you and ask why you're being a bottleneck on purpose? It's different if the bottlenecks are because there's a reason.
Yes.
That's fine, right? But if you're just trying to control the prices to benefit yourself, free trade and all that, I get it, but everybody has global deals on the table for every different commodity, so it's not really too fair. So I think OPEC probably understands that. Again, came out last week and said they expect that there's going to be more output. So I expected that as well. I didn't think oil was going to continue to drive higher. People talking $80, $100 a barrel.
I just read an article on CNBC, which you guys can check out as May 28th, as we are doing a podcast right now, that says oil might reach $100 a barrel.
Nah, I'm not.
But I wasn't buying it either. But it's a decent article. Go check it out, CNBC.
I mean, I understand the inflation and all that, and we talked last week about retail price inflation and how retail price inflation really is not that egregious when you talk about the actual oil crises of the early and mid 70s in the United States, around the world for that matter. The inflation at the pump has not been that bad, but the barrel price, I don't think it's really as correlated the same. It's in the open market. There's enough oil out there to get to retail. Yes. Retail, though, I mean, it costs a lot more to operate a retail location today than it did 20 years ago. So there's all these extra operating expenses incurred in the price at the pump. But the price of barrel, I don't know, it's easier to pull out of the ground now than ever before and more abundant than ever before. We're not near peak oil, and we assumed we were near peak oil, over a decade ago now.
That's very true. Yeah.
And now we find we're nowhere near it, right? Yeah. And while demand continues to increase, supply continues to increase as well. It's just a matter of places like the cartel of OPEC with not withholding stuff. And I think countries like Venezuela have been slapped on the wrist enough recently that they really don't want well, they might as well play ball.
Yeah,
and
they talked about Venezuela in that article, how like they're shut down or something along those lines. I was reading.
Yeah.
Yeah. So, I guess that wraps up the market for this week.
There wasn't much.
Not much.
Things are just flat. They sold in May. They went away. They made their money.
It's just what it is, right?
Yeah, it's summer. You got to expect this. Until we hit real earnings again in July, it's going to be a little bit slow.
So hang with us. There's only a few stories in economy, so let's just dive right into that.
U.S. and China are working on it. Trump tweeted earlier in the week that China agreed to buy a massive amount of agriculture products from the United States. So we're working on, I don't know if that's that $200 billion difference that we kind of, the number that was being bantied about. The problem is, and what I've seen a lot of the experts say, is that the actual agricultural sector of the United States doesn't have the inventory to be able to give another $200 billion of actual agricultural products to China. So we've seen the price of soybeans this week and stuff go up astronomically because that's, I mean, obviously soybeans used in a lot of stuff, right? Corn, soybeans, lots of stuff. Yes. But is there actually the volumes there? Do they have the amount to send? As of right now, we don't think that they do. The experts don't think that they do. They don't think they're going to be able to meet that demand that, well, it's not a demand, but China's willing to make that purchase, right? They're willing to make that $200 billion purchase to make up that trade deficit, but is the product there to be actually sold is the big question. So it's a nice a gesture on the part of the Chinese, and it's a nice way to come to the table of this trade war that's really just kind of bubbling under the surface. It's not near what we were making it 6 weeks ago or whatever.
No, for sure.
They're going to come to some agreements, and they've worked on a few other things. Apparently, though, there were also some heavy duties imposed by the United States on some Chinese steel. Now, we've had the steel tariff, aluminum tariff thing going on, and apparently some of the Chinese manufacturers of steel were trying to get steel into the United States through Vietnam. The U.S. caught this and imposed the same type of tariffs that they were going to impose already. All the steel makers got a big jump off that on the day that it happened. It is what it is as far as all this China-U.S. stuff. I don't really think it's going to amount to a whole lot as far as our international relations souring, but it's going to be a bantering about at the bargaining table for perpetuity. It's going to happen forever.
For sure, yeah.
This is just the first president that's willing to make it such a big deal. He's not willing to let it just kind of sit for months or years. He's working on this on a week by week and a case by case basis, and trying to actually make some progress. So you see it in the news a lot more. But it's not something where I think we need to concern ourselves with it, because the Chinese government and the economy there and the U.S. government economy are all working towards the same thing, which is the two biggest economies in the world remaining the strongest trading partners in the world, right? China wants to continue to flourish. They're at 6.6% GDP growth. They're trying to keep that going as that country moves from being significantly rural population only a generation ago to all metropolis basically. Now everybody is in major metropolitan areas and the rural population has shrunk significantly. They need industry to continue to boom, to make jobs, to be able to continue to build housing, the infrastructure. There's a lot of stuff going on. So China wants the arrangements with the United States to work. They're just they're going to drag their feet. The intellectual property thing is going to be the big topic.
Both ends want the best deal, right? And that's ultimately what they're trying to do. So there's going to be a lot of kicking cans to get there, right?
I just don't think a lot of countries are used to the brazenness of the U.S. government run by Donald Trump.
Oh, yeah.
Previous to this, it was very much a lot of glad handing and taking your time, and deals seemed to be stagnant or dead in the water forever. There was no movement. Yeah. You just didn't see anybody making a big deal about things that seemed to be a really big deal, like the intellectual property and how much actual money is lost from U.S. companies and companies around the world because China doesn't impose any of the free trade laws on intellectual property. And they allow their own companies inside their country to get away with things. Now, obviously, a lot of those, the stuff that's being used with that intellectual property can't be exported to a lot of countries that do impose those laws, because obviously then there'd be a real problem. But there are a lot of countries out there that take those products that also don't impose those laws, and you're eating away at the price, the market capitalization, and the sales of companies that spent all that money in research and development to make that intellectual property their own. And that's because it got leaked out, you to abuse that. That's unfair. That's the part that the U.S. is trying to get fixed with China, and that is really that final shoe to drop. All this stuff back and forth is everybody just making sure, I think, that they agree we're on equal playing field. We understand that we're both trying to work together, But ultimately, China coming to the table on the intellectual property is going to be the big coup de grace, where we're like, haha, okay, fixed. Now China is a part of this first world economy. Maybe the WTO will stop looking at them as an emerging economy, and we can all start working on an even playing field, which is what it should be. We've allowed China to catch up a lot by having a lot of advantages. It's about time now for China to, like, even things out a little bit. It's fair is fair. That's what I would think.
What is up next on the docket? Oh, the Fed came out this...
okay, so the Fed did the meeting minutes from May 1st and 2nd came
That's right.
out, right? So people just got kind of a look into what they were talking about, and it really seems like there's probably another rate hike. They're talking about that. It's a lot of gray area, read between the lines jargon, but the idea ultimately is that CPI, right, the inflation is up. It's up over 2% fairly consistently. It's about time for that other rate hike. We knew there were going to be these rate hikes. And I know we've talked about this, that we shouldn't expect rate hikes. They should do it based on what's going on. And they shouldn't do it just based on a previous laid out schedule. They really should be crunching the data on a day-by-day basis and putting it into a much broader idea. But we also understand we're coming off historical lows. It's still going to come up these 25 bips every time. This is something that's going to take place. 0.25% rate hike on the table. Sounds like probably going to get it here throughout the summer. So I would expect it. I would expect it. Yeah.
It's coming.
It's coming. And the Fed meeting minutes this week didn't seem to cause as much turmoil as sometimes they do, because sometimes it seems like the market's really like waiting to hear with bated breath. I almost feel like the market has priced this in already. Understand? And we're seeing it in real estate. I mean, you're seeing you're not seeing it in a lot of other things. You're not seeing it at the retail level yet, but you're definitely seeing increases in the interest rates starting to affect the real estate market fairly considerably, actually. On a week-by-week basis, we see the statistics starting to show, even though broader statistics, because this real estate thing has really only been happening the last 3 months. Like, I mean, we were talking about MBA mortgage apps and new housing starts being up constantly through 2017 and through the beginning of 2018. And some staggering statistics show real estate doing phenomenally well historically, and we'll look at those a little bit later. But we see real estate starting to be affected on a much more now basis with the interest rate being raised, because you see the lending rates starting to go up, and you see refinancing and stuff starting to become a lot more stagnant or just losing the growth that it had. And again, at historical highs, you're going to see these pullbacks, historical low interest rates, historical highs for a lot of the real estate sales. I mean, so you're going to end up seeing corrections, and the corrections we're seeing in the marketplace now, and it just shows a lot of investors that they need to do a better job of picking the winners. And I think we've talked a few weeks in a row now about how, I mean, the home builders and stuff like that are probably slightly out of the mix. I think they've had their run. Where Toll Brothers and Hovanian and KB and all those guys of Pulte Group, they've had their run.
Yeah. Speaking about picking the winners, what's going on with the sports betting?
Okay, before we get into that, did you hear about this U.S. So the U.S. meeting with North Korea for the 12th of June, apparently in limbo. Trump said he was thinking about canceling it or whatever. Apparently today, the South Koreans and the North Koreans, Kim Jong-un, actually met with the leader of South Korea on the demilitarized area of the border of the two countries, trying to get this Trump meeting back invigorated into the North Koreans. We've talked about this a few times, me and you, in the last couple of days, because, topic of interest.
It is pretty interesting.
It is, right?
World changing.
And
right?
what do you think's going to happen?
I think that they're gonna see the forest through the trees this time, and maybe come to the real world.
Yeah, I think so too.
And join everybody in society.
We've talked about how Kim Jong-un, he wants to be a leader. Okay, so he wants to be a leader, much like his grandfather and his dad. He wants to be looked at by these people of Korea as the man. He wants to leave some sort of a lineage.
And what better way?
What better way in the 21st century when he knows better? He went to school in Western Europe. This is someone who's seen the first world firsthand many times.
Yeah.
What better way to leave the lineage? And other countries, if they open their doors and allow liberty for their people,
helping hands from everybody,
they're going to come from all over the place to try to help North Korea. Because North Korea is in an area of the world where they would be a pretty strong country had they not just boxed themselves off from society the last 70 years or whatever, right? So I think he's actually going to figure it out. I think he's going to take the olive branch, open up the doors of North Korea a little bit. The idea of freedom and probably in the long run leave himself and his family a much stronger lineage, because the liberty of those people is a lot more valuable than the power, just the having the control over nothing. You basically own a ditch. Like, you're basically, it's not like you own, like something grandiose. You're not the owner of the Taj Mahal of countries. You own the ditch of countries. You know what I mean? So it's nothing to really like stake your claim on. You could really do something a lot more and broader in the eyes of
the
guy would win a Nobel Prize, would he not? Like, if he ended up just allowing freedom to reign in Korea after only a few years in power, and Korea really doing nothing bad. He just basically took over and learning the ropes. I mean, you could really give the guy a mulligan on this first bit of stuff if he just, figured it out, and I hope he does.
He'll definitely be remembered by his people.
I'm telling you, this is the time and the place, right? This is the time and the place. Get it done. He's got obviously open dialogue with South Korea now. There's some sort of dialogue with the United States. Dude, you're on the precipice of having the world economy say, like, don't worry, we'll help you. We'll show you how to do this. Just knock all this other nonsense off.
Yeah.
And I think they're going to do that. I really think we're on the way to doing that. Okay, go back to what else you were talking about.
Well, sports betting. I have some cash to burn, and I would like to know what's going on now.
You owe me so much money. You have cash to burn.
I do.
You could stick a $100 in my G-string, and we'll call it even.
After the podcast.
After the podcast. So sports betting is going to be a huge business in the United States. We're hearing that Nevada, Delaware, New Jersey, New York, Pennsylvania, Mississippi are all on the precipice for having sports betting legalized in their states, unless anything stops it, which it doesn't seem like anything's going to, before the NFL season starts. Now, the NFL season, obviously, the main cash cow for illegal sports betting in the United States right now, which totals about $150 billion a year. The NFL makes up a good majority of that, $150 billion a year in illegal sports betting. We should have gotten to the bookie business.
We should have. I'm just thinking that. I don't go through my head.
I don't know if I could take anybody out at the knees. And I don't know much about sports. I feel like I'd probably lose.
Me too.
Right? Yeah. So I don't think I would do very good at it. But a lot of states are on their way to legalizing this. It's going to make a whole lot of money.
Well, as you said, it's
$150 billion illegally. Imagine now that you open it up.
Anybody
legally,
will want to do it.
Now people will feel like like that looming feeling of being a lawbreaker won't be there, and now you can just let your gambling freak flag fly and just mortgage your house. And
dealing with back alley bookies going to be too much fun.
Kind of greasy, I would imagine, right? Just make me feel a little bit uncomfortable. So sports betting, it's coming. And it's a matter of who is going to be the winners. So, I mean, you got to go out there and start picking your winners now. That's the thing. There's going to be some mergers and acquisitions in these sectors. You're going to see these sectors start to come together a lot stronger. The online gambling sectors are going to start merging with a lot of casinos, like you can imagine. So, FanDuel, Wynn, MGM, Boyd, whatever it ends up being, keep an eye on it, because this industry is going to move. There's big money inflows into this. It's a given. This is free money. Somebody's going to win in this. There's going to be a couple of winners that are going to stand out. And as this starts to, like, it's legalized, but once it starts to trickle into the EPS and revs, then you're going to see where it really matters. So I would go out, do your research. I can tell you for the second half of 2018, this is probably in the top 5 for topics of companies I see making a move and things I'm probably going to be invested in myself. So I would keep an eye on this.
Yeah,
I would definitely keep an eye on this.
You mentioned about U.S. home builders before. So how's that going to affect like U.S. home values and stuff?
Okay, so that's the thing we were talking about earlier. So U.S. home values are actually rising at their fastest pace in 12 years. Now they're up 8.7% around the nation year over year. San Jose up the most at 26%. Some other cities that were down astronomically, foreclosures like through the roof in the housing crisis, are now up again over 20% year over year sales growth or price growth. Vegas, Seattle, Dallas, San Francisco, Tampa, Atlanta, Orlando, Charlotte all saw double-digit growth. 21 of the 35 biggest U.S. markets have all surpassed their all-time highs for average prices, up over the housing, before the housing crisis bubble burst, when houses were, I mean, it was the easiest thing in the world. You go get a house.
Get a house back then.
Nothing down. So prices were huge because markets were booming. You see those back now, and we've talked about the real estate again. I'd pump your brakes on real estate. There's other ways to be if you like to be invested in real estate, there's other ways to be invested in it. But if we're gonna start talking about you being invested in the home builders, I would say right now things are well overpriced. This is a historical number year over year. You see this price grow, or this number growing. When we're talking about data as of month to month, you see a lot of sales and stuff coming down, things missing estimates. You get into existing home sales for April down 2.5%. New home sales for April 662,000, missing estimates by 15,000. The MBA mortgage apps, composite index down 2.6%, purchase index down 2%, refinance index down 4%, the 30-year reaching 4.86%, so that's significantly high. These are all bad numbers for what's going on currently. We'll see it in a Toll Brothers earnings call a little bit later. It's expensive. Real estate is expensive. If you really need to get into it, play the REITs. There's a better way to find real estate than buying individual home builders right now, I think. And I'm a big fan of the home builders, like I've said, but I think home building is a good sign of when we've kind of reached a top. I think we're really toppy, and we're seeing that now in the markets.
So it's maybe starting to come back down right now?
I don't want to start saying come back down. I don't want to start just because interest rates are going up and just because PEs are a little bit high, and just because the unemployment rates probably can't get any better. I don't want to start saying, and when we're seeing obviously manufacturing data still continues to climb, we're seeing wage growth climb. So we're seeing enough things on both sides of the fence that I think we're gonna plateau. I want to say
that's a better way.
The waves will be there, but the waves will be somewhat calm. There's no storm. There's no major ups and downs until there's a reason, and I don't see a catalyst. So I'm not going to be a contrarian as to the economy, but I'm definitely going to be a contrarian as to certain things grow as things are moving on the upward trend. And housing was, if you had the money, you could get the loans were available, the interest rates were low, and the inventory for new houses were there because people were still building, they were still out there. So now you see the inventories are there, but the builders have the inventory, but you also take a look at there's all this other headwind, interest rates up. You know what I mean? The new housing starts slowing just to show the market demand isn't there. There's just a lot of stuff in the housing market that tells you that the housing market is probably not the best place for your money right now.
Just right now.
You just want to watch it. But right now, we praised it long enough. I was loving it in 2017, and now that it's just it passed it's past the big jaunt it was going to do, and it did. It had all those housing companies did great for a year and a half. They were running really well,
killing it.
Redbook chain store sales 3.2% year over year. Retail still doing well. We see that in a bunch of the retail earnings that we got this week. A couple not doing as well as we'd like to see, but retail overall, some surprising ones, still doing really well. So retail sales up in the United States as there's money out there. And people like to shop. We were in the mall how many times? How much did we spend at retail this week? In Walmarts, in Winners.
Quite a bit.
We spent a bit of money at retail. It's just, and how much did we spend on Amazon?
None.
Exactly.
None.
Right? Point in case, sometimes when you're out, the money starts burning a hole in your pocket.
Yes. Well, that wraps up the economy. Let's move on to some headlines. We have some U.S. companies to talk about.
Yeah. Just in total, we're talking buybacks. So buybacks totaled $183 billion through the April and May earnings season. Of course, $100 billion coming from Apple's buybacks. $191.4 billion in the January and February earnings season. You've seen a lot of money in the market because all these tax cuts. I know everybody was up in arms about giving all these companies this money, but you're seeing it get into the hands of investors. You're seeing it through dividend hikes. You're seeing it through all these different actions that these companies said they were going to do because these are all smart capitalist companies. They're all trying to make money. These guys aren't just trying to pay their CEOs and just go into foreclosure next year. They're trying to win. These guys are all competitive companies trying to win, and they're properly allocating all this money that the government has so graciously given them back as a a regime finally got in power and realized that capitalism is what makes this thing go. And you're seeing it with these buybacks that are totaling astronomical amounts. $10 billion buyback from Micron this week.
No,
right?
That's quite big.
Micron, if you're listening to the thing, we mentioned a thing earlier about things that are up and down. 7 of 8. Yeah. Micron was one of those. So that's the one I'll give you. Go for it.
We have some video game sales to cover here, which are kind of impressive.
Again, I'll tell you, 2 of the things inside of that 7 of 8 are in this video game market because, if anybody listens to this, they know how I feel about this esports thing. Video game sales up 18% in April, $823 million spent versus $699 million last year. PS4 was the best-selling console in the month of April since the Wii. In April of 2009, it sold that many this month.
Crushed there.
Yeah, crushing it. The PS4 just selling off the shelf. God of War had a great debut, and it was the top seller. And EA is getting ready to debut Battlefield 5 on October 19th.
They are.
Obviously going to be a big winner for EA. EA, one of the 7. That's pretty good.
For sure.
Take a look. Video games. What is there to say that we haven't said already? I'm not gonna.
It's a booming industry.
I can't beat this dead horse. This is gonna be everything, right? Like
it's
when we talk about
Netflix media,
when we talk about it, you think about just sports in general. You're 10 years removed from being able to watch the people with the best dexterity in the world play sports online. It looks real, like a real sport. No one gets hurt. No one gets concussions. No massive arenas needed. No massive insurance needed. No $25-30 million player contracts needed. No knee surgeries.
Nothing like that, no.
None of that, and it all looks the same. You're telling me video games might not take over for live sports one day? You won't know the difference. You'll probably enjoy it more because it can control all elements of everything, right? Like you could have a game in the rain where the players react to the rain, but you're still not in the rain or whatever, right?
I think the worst injury you might get would be carpal tunnel, maybe.
Right, yeah.
That's way better than a concussion or a blown out knee.
It's only a matter of time till colleges start having courses that teach people how to be esports players.
I imagine that's just right around the corner, right?
Right, like it's an industry that's going to take off, and it has so much activity from the youth. Where people want to do it from a young... kids when they were young wanted to be a cop or a fireman or an astronaut.
I remember that because I was one of those kids.
Were you? Really?
Yes,
I wanted to be a professional wrestler. That dream is still alive.
Totally.
But you don't see that now as much. You see video games...
The ones that changed have already come through, right?
And you think video games are a place where kids waste time. This is going to be a place where kids can actually make a living. So they've taken something that people love to do. Like, it is one of the most favored pastimes in the world. And anybody who's good enough, maybe lucky enough, whatever you want to call it, can make an actual formidable living doing that. That's not something you see come along very often.
No.
And the idea that it's not going to take over on a much more exponential level just seems foolish to me. When you just see the influx of all the technology from all the different areas, virtual reality and the AI and everything coming all together, eventually things are going to meld into one magical unicorn of everything. You could just be a dragon slayer in an actual game, and why wouldn't this be the ultimate everything? So it's just a matter of who ends up winning this. There's some real companies out on the forefront already, some of the major publishers. When you talk Tencent or EA or Take-Two or Activision Blizzard, you're talking about, and then obviously the technology that companies like Microsoft and Google and stuff have, where they could get into that field relatively quickly. There's a small pecking order at the very top that are moving in that same direction, and they've all got the same inroads to Intel and Nvidia and IBM and everybody else that's working on these technologies, and it's only a matter of time, man. That people aren't going to be paying to watch guys get concussed 10 years from now.
No, they're not.
This is too much of a fluffy society.
Now definitely it is.
Right?
Yeah, it's definitely. I think it's actually going to
You're going to end up 10 years from now looking at the first generation of major mixed martial artists that all have CTE as well, and people are going to stop being involved in this because we just don't live in a society like that anymore, where it's everything is very, very nerfed, and that's the way the majority likes it.
Yeah.
And the minority that's a little bit bloodthirsty will be able to get their ha-has, but they'll be able to get it in a much more virtual reality, safe way still.
Safe space.
And and everybody will be able to get what they want, and no one will have to worry about guys smashing into each other at 100 miles an hour head first, because that sounds and looks bloody dangerous.
It is.
I would imagine it very much is.
ZTE's been in the news, the limelight, I should say.
They were selling cell phones in Iran. You're not supposed to be doing that. And they were buying all their components from U.S. companies, so they're facing a 7-year ban. We know that. They're estimating about $3.1 billion in losses from the U.S. ban from just not being able to buy the components. Right? They're not even selling anything in the U.S. Trump came out on Friday, said in a tweet he wants ZTE to close down. He wants them to reopen under new management. With very strict security controls in place. They must purchase all their components from U.S. component makers, and they must pay a $1.3 billion fine, and they will remove the 7-year ban. So, balls in your court. If you're going to lose $3.1 billion, this sounds a little easier to just have the guys that were obviously breaking the rules anyways when we were...
Get rid of them. Pay the fine.
Start playing... Like, basically, ZTE's Chinese... And Trump is trying to impose what he wants to impose on all of China, which is for them to play by some international rules, right? So, I mean, I don't know how strict he is on the idea of ZTE only buying components from United States companies, because that seems... a little bit forceful to me, but the rest of it all sounds really, really plausible. Get rid of the bad management, turn over the board of directors, new security controls in place, monitored by people outside of ZTE or the government of China. That seems reasonable. And $1.3 billion in fines for breaking the rules when we told you bloody not to seems pretty reasonable to me.
For sure, yeah. Take that slap on the wrist, pay your fine, just get it over with.
Yeah, exactly.
Netflix had some impressive news.
They are the biggest media company in the world. Subscriber bases are climbing through the roof, my friend. Comcast fell behind Netflix early in the week last week, and Disney, near the end of the week, fell behind Netflix, as Netflix is worth a market cap of $152 billion. Take that to the bank. I didn't see Solo this week.
No, me either.
But I did watch a TV show on Netflix, 4 episodes actually.
You said it was quite good.
It was really good. Yeah. It was some murder thing. Some guy had a bomb around his neck, was forced to rob a pizza joint. It's 4 episodes. It's pretty good. It's like it's a reality thing. It's not like fictional. It's totally, they're talking to the FBI,
real life events,
ATF and stuff like that. It was really interesting, I thought. But again, Netflix just goes to show it was a lot easier to stay at home and turn on Netflix than it was to go to the movie theater. So Disney better get into that streaming business a lot quicker. Netflix also signed the Obamas to produce some films for Netflix. So we've heard they were in talks to do some work together. So I don't know what the films are going to be. They're going to be inspirational films, and there's going to be some political stuff. So it's going to be a whole lot of Democratic, liberal... Yeah, it's going to be all that good stuff. I don't necessarily think I'll be watching that, but who knows?
Well, we have some Apple news this week, which we always have Apple news.
You want me to rip these headlines?
Let's just rip them.
Okay, so Apple's teaming with Volkswagen, working on their autonomous vehicle. They were trying to get with Beamer. They were trying to get with Mercedes. Both of them rebuffed them. Now they're with the biggest auto manufacturer in the world in Volkswagen, using some sort of a Volkswagen van in Southern California, trying to get those up and running as autonomous vehicles for Apple. So they're working on it. It's a slow prop, but working with Volkswagen, I mean, biggest auto manufacturer in the world. Smartwatches shipped in Q1 were 3.8 million. For Apple, they make up 18% of the smartwatch market. Xiaomi makes up another 18%. They're tied to the top for smartwatches sold around the world. Google has 27% market share in the smart speaker business. Amazon has 36% market share in the smart speaker business. But in the first time ever, in Q1, Google's Home beat Amazon's Echo in sales, 3.2 million to 2.5 million. Now, we've heard good things about the Echo. We heard the Echo recorded some stuff it wasn't supposed to.
Conversation.
A couple, that's they've come out and already addressed that. I'm imagining that bug is being removed ASAP. Absolutely. So. What do you think this means? Do you think this just means that, like, the Amazon product was so popular and was to market first and is so much better that just a good majority of people that were going to get it right away got it, and now there's kind of some trickle sales and Google's just doing a little bit of catching up? Or do you think it's that the actual Google product is taking over and that they're going to end up surpassing Amazon. I mean, the market share 36% to 27%. It is starting to narrow a little bit.
Yeah.
I wonder which it is, because I've heard nothing but good things about the Echo, but then of course this week comes out some scandalous news.
Yes.
Who knows what else it could record, right? Like, could get you in some serious trouble there, potentially.
Oh, for sure, right?
Yeah. So who knows what this means for the smart speaker market. We know that this is going to end up being something that takes over. Everyone's going to have this, just like everyone has a cell phone.
Yeah, it's going to be integrated into everything.
Yeah, ultimately the controls years down the road, a few generations from this, are going to be in every building everywhere, and everything's going to be, speech activated. We imagine this, right? So it's just a matter of who ends up winning in this market share battle. We know Amazon, obviously, well out in front in the web services business, the cloud computing, well over Google, but the smart speaker thing starting to become a lot more competitive, and I don't notice Apple making any real competitive headways. Alibaba is still the firm third in this race, but third, well into third. Procter & Gamble has a new app out called Smart Label. You can go through any store that sells anything, Procter & Gamble, and scan up to 3,500 Procter & Gamble products and get all the information you want on your phone. So you get the nutritional facts, you get recipes, you get instructions, you get everything you might need. I thought that was pretty neat. Just Procter & Gamble, such a huge services company, got so many products out there, food products out there. It's just a neat way for people to be integrated with what you're doing. You can go out there and learn how to do something, use that product, and it's much more simpler, just much more integrated to your phone. People seem to like that. They like to have that power there, and Procter & Gamble doing a good job of bringing that to your fingertips. I thought that was kind of interesting.
That's an awesome idea.
Not something that's going to move the share price at all, but ease of use. You know what I mean? Ease of use, definitely. 3,500 products integrated already into the app. So, the WWE, we were talking about wrestling.
We were.
Is, working on a huge deal with Fox. Now, they never announced what the numbers were, but the WWE SmackDown brand is going to be moving to Fox starting in October 2019. NBC Universal declined first refusal, aiming for the Monday Night Raw content. So Monday Night Raw is going to be coming up for contract relatively soon, as SmackDown was just up. SmackDown now moving to Fox. Speaking of Fox, you wonder why Fox got SmackDown. It's because they're losing the UFC, because in the same week the UFC signed an exclusive agreement with ESPN.
That's right.
For $300 million a year starting in early 2019. So Fox is going to have a bit of a lull in content. Early 2019 the UFC leaves, and not till October 2019 does SmackDown start on Fox. Now obviously Fox has a lot of other content they could fill in, but that's a big loss. They lose a big brand in there for a few months before they make it up with another big brand. Like I was saying, the UFC deal, $300 million a year for 5 years, so $1.5 billion. 30 fight nights a year on ESPN, 10 main cards, 20 streaming cards, also doing the prelims before the pay-per-views. So they're doing everything. They're the exclusive provider of UFC outside of actual pay-per-view. That's a huge coup for Disney and ESPN.
Huge.
And for the ESPN streaming service, that is one of those things they needed. That's what they needed right there. That was a big brand to pick up. That's sports. When you talk about Fox picking up the WWE, that's sports, but it's entertainment. It's not sport. UFC is still very much sport, and the ESPN brand has kind of been floundering the last few years. They don't have a lot of major stuff going on there. It's been a brand that's been very much tarnished in the last half a decade. This is a really big signing and a smart move on the cusp of the streaming service, but unfortunately we're going to have to wait a few years before the UFC actually gets to ESPN. So ESPN's going to have to hold tight for a little while. Moving on to Tesla. It's not good when your car sucks.
Never.
You talk a lot of smack. Yeah. And your car sucks. The handling apparently is really nice. The steering apparently moves really nice. It's sleek.
But there's one important aspect.
There's actually two things Consumer Reports didn't like about the Tesla Model 3. But you talk a lot of smack, Elon Musk. You can't come this short with things. So Consumer Reports said they're willing to retest. But let's talk. 152 feet it took the Model 3 to stop at 60 miles an hour. 152 feet when brakes are applied. That's far worse than all 7 of the competing cars in the same segment that they tested, and also 7 feet longer than a full-sized Ford F-150 takes to stop from 60 miles per hour. They also said that the console on the screen, because it's all touchscreen, has far too many finger inputs needed for very simple applications, like to turn on your windshield wipers would be in a regular car. You flick the windshield wiper switch up and down. It's very, very simple. On this, you actually have to hit a button to engage the windshield wiper options, and then another button to turn them on, causing drivers what they would think to be distracted for much longer than they need to for very, very simple applications that have become no more than a simple hand gesture.
Yeah, you don't even need to look.
You don't even need to look.
Yeah.
Now you actually need to turn your attention to the screen. Consumer Reports again said, very nice handling car. It looks good. It's fast, but it doesn't stop very quick. And it's got a lot of these distractions, not to mention production issues and over-promising and under-delivering, and a guy with a really big ego who seems to think his car company is a lot more important than it really is. And the share price in the last 6 months is really starting to reflect that consumer sentiment, and not only Consumer Reports, are starting to question the Tesla company model a little bit. They've offered to retest. They've said they'll retest the car, but that's a media blow and a half.
That is, yeah.
You don't stop as fast as the F-150.
No, you're a car.
You're a car.
You should be like stopped on a dime.
I thought you're supposed to be this new generation or new advent of cars. You're supposed to be the next level of automobiles. Yeah, apparently that's not the case, as you can't even stop as fast as a Camry.
Yeah.
Just saying. Tencent, the company that runs a lot of companies, they run a lot of publishing companies in the video game industry. They're getting into that even further as they've purchased a majority stake in Path of Exile publisher Grinding Gear Games. That company has actually seen a 56% year-over-year player increase. It's been around for a long time. It's free to play. It's like a Diablo game on the computer.
Okay.
Yeah, but I mean, seeing lots of player growth, and we've seen from Tencent that Tencent owns a lot of properties through, what's the publisher? What's the big publisher they have?
Epic Games.
Epic Games, that's it. Yeah. That's Fortnite, right?
No, I think that's Gears of War. No, Fortnite maybe.
No, it is Fortnite at Tencent. Absolutely.
Yes, yeah, Fortnite, yeah.
Yeah, they are a bustling company over there, really pushing Alibaba as they are ahead significantly, I would say, in the video game segment in comparison to Alibaba. But when you compare the two companies, again, we talked last week, 46% rev growth for Tencent, 50% plus rev growth 8 quarters in a row for Alibaba. So on a company by company scale, I would still say but Tencent is in a lot of the marketplaces where I see a lot of growth coming that Alibaba definitely doesn't have their claws in this deep. Tencent continues to dig in the video game industry. And it's a good game. I mean, I only played it a little bit, maybe 3-4 years ago. I don't know what they've done to it since then. I played maybe 5 or 6 hours of it because very similar to Diablo, and I was a Diablo player when I was younger. Thought it was a pretty good game. It was pretty, and I could only imagine as a better publisher or better publishing hand, because these guys are out of New Zealand. I think as a better publishing hand probably gets their fingers in the pie a little bit, you'll see even better and better updates with more money obviously being able to be invested in it as well. We talked about Micron, $10 billion share repurchase plan with the promise to return 50% of free cash flow back to investors by 2019. Micron up on the year significantly as the rest of the semiconductor industry kind of wanes. Micron is doing significantly well, but Micron, again, one of the companies last year that was a laggard in that industry compared to some of the other big runners like Nvidia and Broadcom and Texas Instrument. We saw Qualcomm and we saw Micron not move as much as they should have, and I got in on Micron when it was down, and Micron's up. So happy days are here again, my friend.
Happy days.
Yeah.
We still have Cat to cover.
Yeah. This Fox Disney Comcast thing. I guess we've already talked about all these companies a little bit in different things. So Fox is going to hold a special shareholder meeting in regards to this offer by Disney to purchase Fox. Comcast has said that they have an all-cash offer with a premium above the Disney offer that they're going to offer for Fox. Everybody wants Fox as everybody's trying to conglomerate and get bigger. And all this goes back to, hey, Comcast and Disney both got passed earlier this week by Netflix as the new biggest media company in the world. You're going to have to find some mergers and acquisitions out there.
You
we
are.
see it with AT&T, Time Warner. We see what's going on with CBS and Viacom and all the headaches that are going on there with those two companies that are kind of both owned by the same company anyways, trying to reintegrate.
A little convoluted there.
Yeah, a little too convoluted, right? So we see a lot of this moving around in the media industry, and it has to happen because Netflix is not doing any kind of mergers or acquisitions.
No, they're putting out their original content.
They're blowing through everybody.
Like 86 new films they're doing this year?
Yeah, something like that. With a significantly high budget. Dude.
Oh, those are just films, not like they're series.
Yeah.
Those were just films.
Yeah, 80 films, original
86
films.
Yeah, that's huge.
So Caterpillar, they didn't have the greatest quarter last quarter.
No,
so they can't keep up with demand. There's so much demand around the world, but they're not willing to invest in additional production capacity, and neither are a lot of the suppliers of components for Caterpillar, because we've had pullbacks before, and when the pullbacks come, then you end up having too much production going on, and you have to just pull back on all the production. So they don't really feel like having all that extra weight when the market's at a very top end right now. So Caterpillar's saying with demand really high, what they're focusing on is keeping production steady at where it's at, letting the backlogs build up a little bit, which I don't think is the worst thing in the world. There's no really other major competitors that are going to come and take serious market share from Caterpillar. They're focused on technology. They're focused on their parts replacement segment and on rentals. So they're definitely focusing their attention elsewhere as they realize that the demand for their goods are still very high around the world. But they've seen through the past when there's been ups and downs that in the downs, if you've got too much production, you end up just laying people off and shutting down facilities.
Don't want to do that.
And a lot of your suppliers end up doing that same thing. Why not allow some longer backlogs to build up? It's not like you've got backlogs like Boeing that are 7 years long.
No,
right?
No.
So Caterpillar's going to end up working on the tech, the parts, and the rentals, as opposed to ramping up any further production. Finally, in headlines, CP, Canadian Pacific Railway, is going on strike again. They love strikes. Locomotive engineers and conductors have served notice that they're going on strike as early as tomorrow, Tuesday. Strong demand for potash, grain, and other commodities have left a lot of these guys saying that they're working just ridiculous hours. They're not getting the kind of breaks they need. Demand is too high. It's moving too fast. They feel like they're especially trained part of the economy, and they need to be paid as such. And when volumes pick up like this, they feel like this is their time to go ahead and demand more, and rightfully so. 3.5 thousand workers, 98% of them voted against the deal that was offered. So the strike is going to happen, and they're going to force CP to figure something out, because they're going to need to get those rail cars moving. With all these commodities moving around at such a higher level nowadays than they were even a year ago, every day that they're on strike is going to start crushing revenues and EPS.
I didn't know conductors had such a hard job. You think it was pretty slack. Kind of just sit there, you pull the toot toot.
You get the sweet hat. I think the big thing is like the days away from home.
Oh, I
think a lot of them are on call. There's a lot of stuff where you can end up being on like an on-call list, where if somebody doesn't come in or there's an issue that you get, and so it's tough to build a life around that kind of stuff. I think that seems to be their major bargaining issues a lot of the time. Is pay is an issue, benefits and pensions, those are always the issues. But I think their main issue is the fact they feel like they're kind of run ragged a little bit, and when things pick up, they don't have the backup that they necessarily should have. But the demand stays really high, so they get kind of work too hard. And that's going to be why they, I guess, take the picket line here, probably starting tomorrow.
Yeah.
And that's that.
That's
that for headlines.
Wow.
See, there wasn't much.
No, there
wasn't much. It's hard to get the exuberance going. Like, what did we cover in headlines that was so phenomenal? Like, the Netflix thing is really, really cool. And seeing that happen, and the video game sales, not shocking. The ZTE thing is a proposal. We have to see that actually go through to really be relevant. And ZTE as a traded company over here is not really relevant at all.
No.
The U.S. buybacks is great, but I think we knew that. We talked about that in December once these tax cuts went in. We knew this was going to happen. Yeah, there just wasn't a whole lot that was really stirring the drink, unfortunately, this week. Netflix becoming the biggest media company.
That's probably the biggest story.
That's the big story. That's the big story. Maybe Tesla not knowing how to stop their cars.
Well, I think, I think maybe Tesla or the Netflix.
The Netflix one. I'm gonna have an almond.
Go ahead. I'm gonna have an almond. Since earnings is pretty short, go ahead.
Oh, thanks.
Have an earning.
Have it
Have
on.
it on, yeah, sorry.
So what do you want me to do? What do you want me to do for earnings? You want me to tell you stuff?
Yeah, just tell me stuff. Just let's go through it.
Okay. Toll Brothers. Ticker symbol TOL. EPS of 72 cents, missed by 4 cents. Revenues of 1.6 billion, missed by 20 million. Up 17.6% year over year in revenue. Again, Toll Brothers, one of the big home builders in the United States. Price to close the week 40.77. Deliveries up 15% year over year. Cancellations, though, up 5.3% versus 3.5% last year. Toll Brothers, they didn't like the earnings call. It got hit pretty hard on Tuesday. Intuit, they're the guys that do all the tax stuff, right? TurboTax and QuickBooks and all that. Ticker symbol INTU, EPS of $4.82, beat by 22 cents. Revenues of $2.93 billion, beat by 130 million. That's up 15.4% year over year. Intuit closed the week at $197.09. I use their TurboTax to do my taxes this year. In their segments, Consumer Group up 15%, TurboTax up 4%, Small Business and Self-Employment Group up 16%, QuickBooks Online subscriptions up 45%. Intuit's heck of an earning call. Hewlett Packard Enterprises, that's HPE, EPS of 34 cents, beat by 3 cents. Revenues of $7.47 billion, beat by 90 million, 9.9% year over year. I'm bringing the sneezes out of Anthony. Try to control yourself, my friend. Price to close the week, $15.52. In the segments of HPE, Hybrid IT up 7%, Intelligent Edge up 17%, Financial Services up 5%. Obviously, Hewlett Packard Enterprises, not the same as Hewlett Packard.
No.
Two different companies now, just in case you're playing along with the home game. Gap, ticker symbol GPS, 42 cents EPS, missed by 4 cents. 3.78 billion in revs, beat by 180 million, up 9.9% year over year. They got pretty good same-store sales at Old Navy, but having a tough time at the Gap. 28.15 to close the week. Foot Locker, 55.74 to close the week. Ticker symbol FL. Foot Locker's EPS was $1.45, beat by 20 cents, which is a heck of a beat.
It is,
beat by 20 cents at Foot Locker. They always miss. 2.03 billion, beat by 70 million. Revenue only up 1.5% year over year. Comparable sales down 2.8%. Store count down 70 stores in total in the quarter. Foot Locker, we were talking about this too. I'm gonna have another almond. We were talking about this. Foot Locker looks a lot better recently. Foot Locker had a real color feeling to it before. Black, red, white. It was really drab. It didn't pop. And the Foot Locker at West Edmonton Mall in the last, I'd say 3-4 months, has got a lot more colorful. I don't know if that's seasonal.
Could be because it's summertime, but it had some nice blues and pinks mixed into their clothes and stuff.
I went in and bought something, right?
You did.
Yeah, right? So, I mean, it's looking good. I like the way Foot Locker's at least laying out some stuff that looks a lot more colorful now.
Yeah, I don't know about like in the States, but you go to the Nike store here and stuff like that, and it's all the same colors, black, gray, white. It's nice to see some little pizzazz to the clothes, a little bit of color.
I think people like the individuality of that stuff.
Yeah, oh yeah. Sure.
I understand that like you might not sell as much of it, and it's probably a lot harder to hold 50 pieces of inventory for something you only may sell 10 for, so it might be easier for you on a budget basis to only bring in a couple show pairs in like the actual like sizes that sell all the time. But man, does it add to the eye appeal.
Oh, it does. It catches the eye.
Absolutely. You see like nice orange creamsicle looking shoes. Yes. You know, like you're absolutely drawn to those.
What is those?
Yeah, and you know, the price speaks for themselves. They're marvelous looking shoes, but they cost a lot of money. But I'm somebody who's a bit of a shoe whore. I'm willing to pay that kind of money, and those are the type of stores I shop in. It's tough to buy shoes online. You got to go and actually try a pair of shoes.
You really do.
So Foot Locker is doing a good job of at least drawing my eye. They're not doing a great job of comp store sales. Yeah. Money burn hole in the pocket, right? Lowe's, ticker symbol LOW, EPS of $1.19, missed by 8 cents. Revenues of $17.4 billion, missed by $290 million. That revenue number is up 3.2% year over year. Lowe's, same thing as Home Depot, late start to the season. That's what they're blaming all this on, right? Like just winter took too long to get out of there, and the people building stuff on their deck and planting things, all that just didn't pick up as quick as they would like, and it's not reflected in this quarter. They think it's going to be reflected going forward, even though guidance for Lowe's wasn't that great. 96.69 to close the week. Comparable store sales only up 0.6%, so falling behind Home Depot significantly. Operating margin up 81 basis points. SG&A up 113 basis points, but at least gross margin up 23 bips. Lowe's easily the number 2 in the field. Easily the number 2. It's not even a question. Target, TGT, EPS of $100, they wish, $1.32, missed by 6 cents. Revenues of $16.78 billion, beat by $280 million. That number is up 3.5% year over year. Comparable store sales up 3%, traffic up 3.7%, and digital sales growing at 28%. They're doing a good job at Target. They're just never going to be Walmart.
No, they're not. No.
Is that allowed to be said? They're doing good job. Yeah. They're a good number 2. They're never going to be Walmart.
It's better to be than second than.
If Amazon ever buys Target, like we've heard, which I doubt they will, if somebody bigger buys Target, which I just don't see, for reasons that, like there's just the competition just doesn't seem to be like. Why would you do it? There's so many other avenues to get into the marketplaces that Target's in. Amazon basically is Target without all the overhead. They've got the Whole Foods and they've got the retail online. Why do they need big retail to sell the same T-shirts? Seems kind of ridiculous to me.
It kind of does,
right? Like everybody knows Amazon without having to have a big billboard at every mall that basically no one goes in anyways anymore. So Target doing a really good job staying at number 2, but a firm number 2. I would bet best of breed just in case. Walmart picking up Flipkart over in India.
Oh, that's what they did.
Putting up a fight against Amazon. Target just trying to stay alive. Tiffany, big quarter. Ticker symbol TIF. EPS of $1.14, beat by 31 cents. Revenues of $1.03 billion, beat by 71 million. That number up 14.5% year over year. You know where the money's going. Money's not going to the Gap.
No.
It's not going to Foot Locker.
It's going to diamonds.
The people that are making money are the people in the bigger earning brackets. They're spending money on diamonds. Tiffany closed the week $129.21. Gross margin up 90 basis points. Comparable store sales up 10% at Tiffany. 10%. They shot up on this earnings call. People were wondering where the money was. We've seen retail. Some retail do good. Some retail do bad. The car sales haven't been astronomical. People have been wondering what maybe some of that money is just going into treating yourself to feel beautiful.
Of course it is.
I think
Why wouldn't you want to treat yourself?
Yeah, I wouldn't mind a nice diamond brooch right about now.
I think that's one retail
Any
store.
suitors out there want to send me a diamond brooch, you feel free.
That's probably one retail store too that I will never ever die off. Would be like a jewelry store, because you want to go in, get it authenticized or whatever.
Well, especially at Tiffany's, because there's so much prestige in that name, right? Like
it's almost like an experience taking your wife or your girlfriend or your fiance to Tiffany's.
Absolutely,
right? Such a classy name too.
And that's clearly what's going on, because that was a heck of an earnings call. Speaking of retail doing well, Best Buy, ticker symbol BBY, EPS at 82 cents, beat by 8 cents. Revenues of $9.11 billion, beat by $380 million, and up 6.8% year over year. Closed the week at $68.45. Comparable store sales at Best Buy, 7.1%. Estimates were 2.9%.
What's Best Buy doing?
Best Buy's doing something right. I just bought headphones at Best Buy too not too long ago.
They did, yeah.
Yeah, Best Buy's doing. I bought a computer at Best Buy too not too long ago.
There you go.
Right? Apparently, I'm helping on this.
You are.
Yeah, Best Buy.
Go.
Again, some retail doing really well. Best Buy has figured out how to streamline their business. It's kind of amazing. We've seen a few good earnings calls in the last year from Best Buy. Surprising earnings calls where they beat estimates and like the 7.1 with an estimate at 2.9. Like that is, Best Buy is a well followed company. That is a traffic beat and a half.
Yeah. So
there you go. Best Buy doing as well as maybe Tiffany, selling diamonds and selling washing machines.
Yeah.
The last ones are Canadian financials.
All banks.
All banks.
Yes, they are.
So Steve Eastman came out a couple of weeks ago, said his biggest short was Canadian financials right now. I don't think a lot of people realize that while Canadian financials are really good, they run really hot all the time. They're high priced, there's no question. They beat a lot of time EPS and revs. But they're not just Canadian banks. These are well diversified banks that have headquarters all over the Western Hemisphere.
Sure. Yeah.
So you start looking at these banks as just Canadian banks or Canadian financials, you start to lose the big picture that these companies have diversified potentially better than a JP Morgan or a Bank of America has.
Yeah, it's TD, and I know CIBC has like international.
Oh yeah, Bank of Nova Scotia, absolutely,
yeah,
absolutely, right? Like I don't remember, was it CIBC that just purchased the fund or the bank out of Illinois there? The Bank of Nova Scotia just bought into that bank in Chile. Right, so there's a whole bunch of movers and shakers in the Canadian financial industry that are moving around internationally. They're just broadening their horizons. When Steve Eastman looks at them and says that's a big short that he has, I just wonder if, maybe looking through a much more narrow lens and not seeing that these banks notice that Canada isn't the end all and be all, and that they've took a lot of their capital expenditure and expanded outward as well. TD, probably the best earnings call out of the three. EPS of $1.62, beat by 12 cents. $9.47 billion in revenue, beat by $710 million, up 11.8% year over year. Closed the week at $58.96. Canadian retail net income up 17%. U.S. retail net income up 24%. TD always growing. I love Canadian financials. I think they're a little overpriced. There's never a good entry point.
Never.
There never is. They always seem to go to a spot, sit around, do something good, move up. And never does that spot feel like a good entry point. There's never these egregious pullbacks.
No, never.
You just don't really see it, right?
They're just big drops.
Very, very stalwart. They sit firm because they're strong, and rightfully so. Canada has to have something really good. Our banks are some of the strongest in the free world. CIBC, ticker symbol CM, EPS of $2.95, beat the street by 13 cents. Revenues of $4.38 billion was in line with the street. That's up 18.4% year over year. CIBC is seeking approval from the Toronto Stock Exchange to buy back 9 million shares from the volume that's out there. That's a lot.
That is a lot.
CIBC reinvesting a lot of money, bringing a lot of shares back home. Not surprised. As you continue to rake in the dough, you got to do something with it. We'll see if the approval goes through. RBC, the biggest bank in Canada, actually had a fairly tepid earnings call. RBC ticker symbol RY, $2.06, beat the street by a penny. $10.05 billion. Might as well have been $10. Missed by. I heard my kids come home upstairs. Did you hear my kids? I heard my kids, and I got distracted because I haven't seen my kids in like a day and a half. $10.05 billion, missed by $440 million, and that was 3.5% less year over year. Capital markets income down. It was flat, but down 11% from last quarter. Personal and commercial banking was up 7%, but down 4% from last quarter. That's because it's up 7% year over year. Wealth management up 25% year over year, but down 10% from last quarter. So last quarter, much better than this quarter. They're still doing better than they were last year. RBC, obviously, still the strongest bank in Canada. 76.03 to close the week. TD, definitely the better earnings call. But Tiffany and Best Buy, the big eye openers. Intuit, I thought was going to have a good earnings call as well, and I'm not surprised they did. It's tax season. That stuff was pretty much penciled in already. Toll Brothers, though. Toll Brothers really, I think, setting the pace that the housing builders are probably due for a pullback. If you're in the ETF or you're in an individual one, I would maybe just take a breather on that.
Yeah.
Let that industry sort of reset itself. See, there you go. What was this? An hour and 7 minutes.
Not too bad.
There wasn't much going on.
No.
We'll have to have something new next week to talk about. I'll bring some nice anecdotes about art or something, right? Yeah, the fine art of toilet bowl molding. I'll bring that to the table.
Prison wine.
Yeah, prison wine. My college dissertation on prison wine. There you go. We'll have no problem fleshing things out next week. So for Wall Street Breakdowns, this week on Wall Street's short little podcast.
It was.
I'm Cody.
I'm Anthony.
And if you're still here with us this long, you're far too drunk.